You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again for a little old program I like to call around these parts, the OB, a.k.a. the Option Block, a.k.a. your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Hope everyone out there is having a safe and happy and healthy, somewhat tumultuous, perhaps, start to the new year here. We're going to keep things rolling, keep that great slew of content you guys have come to expect from us over the past January. Now it's 14 years. How crazy is that to say out loud? Yeah, we started this way back in the dark days of January of 2007. A little bit has changed in the world and indeed the markets since then. You know what hasn't changed? We're still cranking out great content for you guys. We just do a lot more of it now than we did back then. So remember, wherever you subscribe to this, it could be just the Option Block, could be the full network. Keep those reviews coming. We saw a massive influx of new listeners there in 2020. Want to keep that ball rolling. Want to keep servicing all you folks out there. So keep those reviews coming. It really does help new folks continue to discover the content in these mad times we're all living in collective. What's the old Chinese blessing / curse? May you live in interesting times. Well, we all are certainly doing that right now. Of course, keep those questions coming too. We do love to hear from you guys. And let's see who we're going to hear from on the old program today. First, I am pleased to say we are joined once again by the dynamic duo themselves, holding down the Demand Derivatives hot seats today on the show. We have our old friends, Mr. Don Schlesinger and Bob KRAUSE, respectively the president and CEO over there at Demand Derivatives. Gentlemen, welcome back to the Option Block program.
Hey, thanks, Mark. Hey, it's really great to be back. I love the show and really looking forward to it.
Thank you, Mark. Happy New Year to everyone, and good to be back.
Yes, good to be back indeed. And also joining us safe in his GIOVINAZZI compound over there on the shores of Maine. He is the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program in these tumultuous times we are all living in, sir.
I would have to say, it was funny. We just did a thing in an Option Pit. We had we have a kind of a political lawyer insider now doing commentary inside of Option Pit, helping us with strategy. And he's like, wow, the Congress is going to certify on the 6th. He was just saying this to, I think, his wife on Monday. He's like, what could happen? So, I think even he was a little surprised. But
what could possibly go wrong with that?
The costumes on the people storming the Capitol, they looked a little suspect to me. I don't know. They looked like at a central casting somewhere.
They were an interestingly garbed crew. That is certainly the case. And also joining us, I don't think he was one of that crew. He's just usually a happier, more optimistic guy than that. He is Uncle Mike TOSAW, safe in his environs out there in St. Charles, a.k.a. the land of St. Charles Wealth Management. Uncle Mike, welcome back to the program. Hopefully you weren't storming the Capitol yesterday, sir.
I was not. I was in St. Charles just kind of watching the news with my jaw hanging down, saying for probably the 25th time in the last 12 months, I've never seen anything like this.
Yes, I think we're all collectively in that boat. So let's just dive onto that boat and ride the waves together as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show we break down what the heck is trading, what is lighting up our collective tapes out there. And as we mentioned, it's kind of inescapable there at the top of the show, some unprecedented activity going on down there in D.C. yesterday. I'm a bit of a history buff myself, and to see anything even remotely analogous to this, you have to go all the way back to the War of 1812. At least it was a uniformed army. It was the British who were coming in and rampaging and burning, the White House and most of D.C. Yesterday was a bit of a, as Andrew mentioned, colorfully garbed crew, but not quite the same thing. But still, we are living, once again, in unprecedented times. Yet the markets shrugging all of that off today, listeners. Also, of course, obviously, rising grim toll coming out of the pandemic, certainly in places like L.A. and other areas. Market not spooked by any of that. Remember, it kicked off the year with about 2% sell-off, and that pretty much was about it. It's been pretty much green ever since. NASDAQ did have a bit of a red day yesterday, though, one of the few major indices bucking the trend. Today, it's all green on the screen. We got the Dow, actually the laggard, up about 0.75%. S&P playing its Goldilocks role yet again, up about 1.33%. And the NASDAQ making up for lost time and lost ground yesterday, up over 2% today, about 2.2%. That's despite the fact, forget all the insurrection yesterday, we even have Citibank coming out and downgrading U.S. stocks, saying they expect equities will be flat in 2021, which is interesting, perhaps going against the consensus of our audience. We'll get to that a little bit later in the show. Of course, let's set the table here. Coming into showtime, all the vol products across the board, mostly down from our last show, some down pretty precipitously. Kicking off the show, VIX was at about 22.5, puts it down almost 6 points, about 5.75 points from where it was on our last show. VVIX, aka the volatility of volatility, at almost 112, about 111.75, so down almost 18 handles from where it was this time last show. VXX, a product you guys all love to fade, back in fade mode at about 16.75, down almost 2 points, about 1.75 points from our last show. And VolQ was kicking off the show right around 24, puts it down about 5 handles from where it was this time last show. And since we're talking about vol, let's kick it off going back out to the land of demand derivatives. Bob and Don, you guys haven't had a chance to join us recently. You didn't have a chance to join us on our 2020 year in review. And I know you guys have been busy over there at Demand Derivatives compiling your realized volatility and actually putting out some interesting realized vol rankings. So maybe let's start there. Let's look back a little bit before we look at today's activity. You guys have been crunching the numbers over there on realized vol. What were some interesting surprises or takeaways, or maybe even some interesting rankings you guys have for the completely insane year that was 2020?
But I'd like to, Mark, go over exactly what it is we created to make sure people are on the same page. So, when people create indices, they generally combine stuff, right? The S&P 500 is a combination of 500 stocks. The Dow is 30, et cetera, right? And in the land of risk, that didn't work, right? We needed to kind of explode things, right? So we take one asset and then we explode it into various risk buckets. And because risk just can't be, boiled down to one number. I mean, people have tried, and, generally it's okay, but it really doesn't work well. So if you want to get a complete picture or a really good picture of risk, you really need to look at it in its various forms. And so how did we explode an asset's risk into 40 buckets? So what we did was we took 7 different styles. So the one we've been talking about is realized vol. So that's kind of a historical look. And then we look at the realized vol of vol, so the volatility of the volatility. Then we also have overnight or intraday volatility, where we take more data points. Mostly realized vol is just measured by close-to-close numbers, and the overnight or intraday vol we use 4 numbers, the open, high, low, and close. That gives us a little bit more accuracy, actually a lot more accuracy. And then we also take the correlation, we take the variance, and then all of those first 5 are historical looking, but then we have 2 more. You may have heard of Garch models. Garch models was actually created by Robert Engel. He actually got a Nobel Prize for his ARCH models. And ARCH models are essentially looking at historical volatility to predict future volatility. It's evolved into the Garch model, but then 2 professors, Jim Gatherall from Baruch College and Fulvio Corsi, he just switched. He was at the University of Venice, but he's at a different university now. Those 2 professors created rough vol and HARC vol. And these forecasts seem to be better than Garch models. So what we did is we then broke it down. So that doesn't create 40, right? That's only 7. But what we did was we broke it down into different time frames. So we look back, let's say we're calculating realized volatility. We look back 1 day, 1 week, 1 month, 1 quarter, a half year, and a year. We do the same for correlation. We do the same for realized variance. So there are 6 time frames that we look back. And then when we're forecasting in the future, we use the same time frames, but now it's forward-looking, right? 1 day ahead, 1 week ahead, 1 month ahead, 1 quarter ahead. So all of these 40 indices, actually, if you multiply 7 by 6, that's 42. But we only have 40 because it really doesn't make sense to calculate a correlation for 1 day or a week. So that's how we got to 40. But these 40 give you a really good picture of risk, either backward-looking or forward-looking. So that's what we've done, and we've made those indices available on the top 40 assets. So you pretty much name them, if they've been scrolling on the Bloomberg ticker or at CNBC or whatever, we've calculated the volatility of that. And right now, they're available gold is free. S&P, like Spider, is free on our website. And the rest of them are available with a subscription at Bloomberg and at Quandl. Quandl is a NASDAQ company, so basically Bloomberg and NASDAQ. So that's how they're constructed and where to get them. You just go to our website if you demandderivatives.com and then there are links there that'll get you to the rankings and then to be able to order them. But now I'll turn it over to Don. Don, you can tell them about what's hot and what's new and what to look for, and I'll take it over to you.
So anybody who's at home at the moment, as opposed to listening where you don't have a laptop or a computer or iPad, you might want to take a look. You can go to Demand Derivatives. You can also go, because this is all volatility related, to RealVol, RealVol.com. And when you get to the menu, just go to the second pull down, Real Vol Indices, and then in the sub-menu, Weekly Volatility Rankings. And you might follow along if you have this available. If not, what you'll find are the 40 assets that Bob mentioned, just about anything that you'd want to think of, commodities, FX, gold, corn, crude, notes, equity indices like the S&P. And then you have the 21-day monthly historical volatility of each one of those indices on a comparative basis from the last week's close and the week before that. So you see a change in any historical volatility, both in absolute points and in percentages. But then the really helpful feature is the last ranking, if you will, by percentiles. And so what we've done is taken all of the data available in our database, and normally that goes back to the very first listing day of what the underlying asset may be. So years and years and years. And we compare the current 21-day realized volatility to the current to the historical volatilities from years worth of data. And so we rank each one of these in terms of what today's reading is compared to historical readings. Lower, higher, how much so? The top one on the list is natural gas at the moment, 90th percentile. So what does that mean? Simply that 90% of the time, natural gas volatility is lower than it is right now. So it leads the list, and only 10% of the time has 21-day volatility in natural gas ever been as high as it is right now. You go to the other end of the spectrum and you take a look at things like the Nikkei or treasury bonds or 2-year or 5-year notes or FX, the dollar yen, and you find single-digit historical volatilities, anywhere from 1, 2, 3, up to 9 or so. Those are assets whose historical volatility at the moment is extremely low compared to what they have been, where 90% of the time or more, those volatilities have been higher. So we find this to be an extremely valuable tool, especially we have options traders as our listeners. You are fixated on implied volatilities and looking at those when you're pricing and valuing your options. But I think that it behooves every options trader, since these are derivatives and they're derived from an underlying, to actually take a look at the underlying asset on which the options are based and to have some knowledge of where that volatility of the underlying asset stands right now compared to where it normally is. I mean, it's common sense to me that if you're buying an option and it's an asset whose volatility is extremely low at the moment compared to historical levels, well, then that's something that you might view as favorable. On the other hand, if you're buying an option and the underlying is at the 90th percentile, meaning that it's extremely likely that in reverting to the mean, that's going to go lower, you might think twice about it, as the underlying asset volatility is likely to decrease over time as you get that reversion to the mean. So this is an extremely valuable chart. It's free. It's on our website. And I would invite listeners to take a look at that and hopefully find it useful for you.
Thank you for that, Don and Bob. Let's keep on rolling out here now. Let's go back out to the hinterlands of Maine. Mr. Rock Lobster, we're talking all things volatility out here. So what have you and Volman been keeping an eye on in today's session and indeed on this crazy, unprecedented week, sir?
Well, it's hard to follow up that. You got the Vol Masters coming on, and then you just bring the stick figure on guy afterward. Like, what the hell's that? You got to lead with the stick figure guy and go into the serious guys.
I'm trying to let the audience down, take a breather a bit before we dive back into more good stuff.
What sort of show maestro are you? Anyway, so I just break myself up. So what is going? I guess one thing is it's hard for VIX to go down too much more when we keep rallying like 2% a day every day. So at like 21.5, as Don well knows, it's hard for realized vol is relatively high, even though it's going up, it still counts, right? So I think we're in that area of continually dragging, at the money vols a little higher because we're going up with such, such force. And I think that is, I feel like I don't remember that like in the 90s and the 2000s, in the dot-com era, that was a little different. That was kind of a crazy year. But the strength of rallies is pretty amazing. And I think that's helping keep vol down. But I think right now, we've probably had, the fact that they certified Biden and went through all the process, I think that was a big part of the thing holding volatility up. And we haven't got back to the vol lows of yesterday, which I find odd. I thought we might have seen like a 21 at the end of this week, but ultimately, if we keep rallying hard, it's not going to happen. So when you look at this, eventually you would think that because I think the last couple days, I think Monday and today, we had the largest relative moves we've had, I think, in about 3 weeks. Realized vol, the 30-day realized vol, gone to about 10%. So I don't know what the heck VIX is pricing now at this point. Granted, we are moving. Maybe they're trying to sort of game or estimate what happens in Congress. Who knows? I think another thing, too, is I think now more traders just buy puts and buy stock. I know I can hear Don kind of cringing already, but I think, they're buying that protection. It's keeping the vol up. There's been a lot of put buying open interest. And they're just letting the longs go because the upward moves are they're huge. Like if Tesla's going up $100 every 5 days, I mean, why wouldn't you buy puts in stock, right? Certainly you don't want to be selling calls, and that's, I think, another problem, right? You've got everything connected to Bitcoin is going through the moon. I mean, there's just a lot of explosive upside moves, and I just don't think there's a lot of sellers of vol up there. And I think it's another reason why we're not seeing, VIX drop. We did drop into zone 3, right? That third quartile of vol. At least the way I measure it. And so it's come back a little bit, but I think for a while we just need the market to do nothing for a while. We need to let things compress a little bit. But, I think the second part is where is sort of inflation and money going? Now Bitcoin's 40,000. It's all like, it's kind of like Crazyville. People aren't even buying gold. Like, screw it, we'll just buy this Bitcoin thing because it goes up faster. So there's a lot of, that sort of realized movement. It's hard for vol to come down, right? And the S&P 500 is sort of a proxy for all of this stuff. It kind of gets thrown into the soup somehow. People want to buy some puts in there to protect some of the other stuff. But anyway, I think that's what I see. I think we could see lower vol, I think, as far as the election goes. I think anyway, but, we said a long time ago that Donald Trump was not a single-digit vol president, which, given what we've seen, by the way, pretty amazing that 2017 even happened. You think about it.
It does put that in a very different light.
It's crazy that we even, I was looking back at some just premium, like at the money premium back then for the SPX. It's like nothing, So But that's just it. Market conditions change. You have to be conditionally aware. That's why I think it's good, like products like Don's and all that stuff, where you're seeing realized vol, price of realized vol, trying to price to get a sense of where things are. And that's why I think we have VIX at this level. So I thought for a while we could get a press lower in vol sort of after this Georgia runoff. And it happened. We dropped one from 20. We had that brief pop, but that was a great vol put buying opportunity, I think, earlier in the week, like vol puts. And now it's just, now we're kind of in this thing where seeing what happens and see if we can get some real volatility compression. But ultimately, the market has to stop moving, and it just isn't yet. That's we had a kind of a period of lower realized vol, but it seems to be picking up again.
Speaking of picking up, you mentioned Bitcoin. I'll talk more about it on TWIFO later, but this has to be the trade of the decade now. This one, we roundly mocked it on our Crypto Rundown program too. A trader coming in buying about 20,000 of the January 36,000 calls back when Bitcoin was 20,000 handles lower. It was certainly as high as the 16,000 level, I believe, and it was just it seemed absurd. We talked about it, maybe it was just a risk management play, and there certainly still could be that angle to it. It probably was against something else, in which case it isn't probably the home run that it seems like it is. But just from a pure this leg of the trade perspective, it's an absurd winner. I mean, these calls are $3,000 in the money now, and they were fractions of a dollar. With the mods. We'll have to crunch the numbers to see how well they're doing, and if they're still they're still on. They were on as of Monday still, so just these are the times that we live in, listeners, as we head back on out to the non-Bitcoin realm of St. Charles. Mr. Uncle Mike, sir, restore some sanity to our lives, sir, and some normalcy, some optimism. What is lighting up your tape, sir?
Bitcoin.
You're all in on Bitcoin now. Is that what you're saying?
No, I'm just going to say I still hate Bitcoin, even though I hate the fact that I didn't buy it when I should have. But I'm not in it. I've never had a position in Bitcoin, but I still don't like it as a long-term investment. Trading, obviously, totally different realm, but as a long-term investment, I'm definitely not a fan. But what's lighting up my tape today, 10-year note, the yield is back over 1% again. Which just shows you how low our interest rates are to begin with in general. That's probably the one thing that is really lighting up my tape that hasn't already been discussed as of yet. We have that, and that not sure how long that's going to last, but it's definitely, we're getting to more of a, we still appear to be very risk on, with the fact that the markets are doing what they're doing. Oh, by the way, there's never been a better time to sell in the history of the entire stock market than today, by the way, because we are at all-time highs again in the S&P 500. Forgot to say that initially. So we have that. Financials are continuing to rally. XLF's around the 31 level. And so what this appeared to be yesterday was that it looked like we were shifting out of technology and other things were rallying. And then, of course, we had the craziest political event that I know I've at least seen that I've ever seen in my lifetime. The fact that we have people storming the Capitol like they did, and seeing people in costumes sitting in the Speaker of the House's office. It's really very. I literally looked at it, and it looked like it was a storyline for WWE, is what it really looked like and felt like. And watching it, it was so bizarre to see something like that. And thankfully, not a lot of people were hurt, but it appears that things are under control with that. But with that, the markets were up roughly 1% on the day, and this is the S&P 500, and then they went down to being up only about 0.5% on the day. And so I was planning on staying in. I had a very out-of-the-money put spread that I was short, and I was planning on staying in, but I actually did break my rule yesterday in that I got out of it before the close of the market, just because of the fact that normally I'm very adamant about never breaking my rules ever, but if we have guys in costumes storming our nation's capital, I didn't feel comfortable going home with that spread on. So I put it back on this morning. I missed out on like maybe 7 or 8 pennies. I don't know, something like that from the run up for the rally overnight. But I'm really not concerned with that, just because of the fact that I wanted to sleep at night knowing that there were people in costumes in our nation's capital. And so that was a concern of mine. But for right now, it does appear that that's under control, and the markets are looking to the upside, and that they believe that with the Democrats in control, they feel that they're going to have more investments in infrastructure, so to speak. And I'm saying that you could also interpret that as tax increases on the middle class. I don't know, whatever way you want to look at it. But there's going to be the government being a little bit more active. And I think right now, Biden's almost in a position when he takes office in a couple weeks that he has to really reach across the aisle, because there's a lot of people who are as we saw yesterday, that are angry that their guy lost. And so with that, I think we will have, from an economic standpoint, at least in the near term, a more centrist approach in our government. So I think the market is a little bit bullish on that. But with Andrew had mentioned that the VIX still hasn't gone down to its low of yesterday. I guess it's just the guys in costumes storming the Capitol is kind of the factor for that as well. So that's my take as to what's happening right now. And that's what I'm seeing.
Let's see what we're seeing out there in the markets as well really quickly, and then we'll move on into our next segment. Coming into as of a few minutes ago, VIX doing about 228,000 contracts, so a decently active day, but about exactly 200,000 shy of its ADV, which is 428,000 right now. SPY looking robust at about 2.35 million contracts, the ADV about 3.6 million. The S, 658,000, the ADV about 1.1 million out there. The Q, 718,000, the ADV about 891,000. And small caps, at least through the lens of IWM, at about 423,000, their ADV 665. So putting up decent numbers, none of them blowing past their ADVs. Even those ADVs have been creeping up, a sign that some more volume is starting to hit the tape this week. Let's go out to the most actives. Cost you 230,000 contracts today, listeners, to break into our top 10. They get you all the way to Palantir. Easy for me to say. Palantir. I think I know my Tolkien-derived tickers by now. We do have our own Eye of Sauron on the show, after all. At number 9, a newcomer, maybe perhaps the unfortunate ticker given yesterday's events, Riot. This is Riot Blockchain. They're good for 271,000 contracts on the tape today, so not a bad debut here on our top 10. Number 8, Wells Fargo, 280,000. Number 7, AMD, 329,000. Number 6, Plug, a.k.a. Plug Power. They're in the midst of a corporate action. There looks like someone is gobbling up about $1.5 billion worth of Plug Power today. That's good for about 353,000 contracts on our top 10. Number 5, Bank of America, 380,000. Number 4, NEO, always kind of lurking in the top 10 these days. Number 4 today, 447,000 contracts. Number 3, BABA, 512,000. Numero dos, yes, I said 2. That's Apple, 1.15 million. What could trump Apple? Well, Tesla, of course, 1.28 million contracts on the tape, passing the 800 handle out there. So yeah, Bitcoin's threatening 40,000, Tesla 800. These are the times we are living in, listeners. We have some earnings popping off, but we'll get to that probably on another show here. We're kind of coming up against it as we head right on into our next segment. It is time to unleash our own Eye of Sauron, perhaps use our Palantir to gaze into the future. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, welcome to the Odd Block. Mr. Rock Lobster, it's been since last year that we've done this. Are you sure you remember how it goes, sir?
I'm gonna try to see if I can channel.
You're gonna soldier on. All right, we'll see. I'll start off slow for you. Get your sea legs back under you here. Let's start off with a newcomer though. Gonna throw you a bit of a curveball here. This is Nuvasive Inc. Ticker symbol NUVA, N-U-V-A. They are a medical device company out of San Diego. Ticker symbol, like I said, NUVA, N-U-V-A. Trading right now, $56.83, off about $3, almost even. That's about 5% on the day. Let's go back, look at the sordid tale that is the past year for NUVA. A year ago, they were trading $78. and they pretty much were right around that level, 79 and change, when the big sell-off started commencing back on February 20th. They sold off all the way down to about 28.5 before rebounding pretty quickly. By late March 25th, they were already back up to $50. And then by everyone's favorite day, June 8th, where so much of the market peaked, they hit 66.5. But then, like the rest of the market, or I shouldn't say the rest, but a lot of the market, particularly some of these smaller names, started selling off again and never really made that level again until recently, just this past session, actually, yesterday, 59.89. That's when they really kind of finally got back to those levels or close to it of their June 8th peak. Actually, still shy of it, though. They were 66.5, so not quite there, but threatening it yet again for the first time in quite a while. And that's where we find ourselves today, even though they're coming off it again today, listeners, off $3. So maybe not going to threaten that June 8th high again anytime soon. Let's see what our Eye of Sauron found out there today, listeners. It's like it might be some call love to the tune of 9,852 of the Jan. So these are not that long term, going out in a few weeks here. Jan 65 calls. So someone perhaps looking back at that June 8th level and saying we could do it. Again, they hit 66.5 that day. And picking them up looks like for $1.25. This was a crazy wide market, as you probably would expect on these calls, listeners. 80 cents at $1.45. So maybe some dispute as to what they're actually up to over there. There are earnings, but not in this cycle. The next announcement is on February 18th. Mr. Rock Lobster, let's kick it off. What do you think our friend is up to out here in NUVA? I think he's buying these calls. I think he got a heck of a good fill, and he sold them. There actually was $1.25 bid, and he's overwriting this bad boy. What's your Eye of Sauron, your personal spider sense telling you, sir?
Personal spider sense? Oh, my gosh. That is a... And you know what? Just to start the year with a name that neither of us have heard of at all, I think, correct?
Yeah, it's fun to kick it off with some crazy newcomers.
I mean, I have to say, you look at Jan 21. I'm just looking at the term. Okay, it's probably the 15s. I would guess this would be a right. It looks like a pretty aggressive call purchase, wouldn't you say? Like $10 out of the money with only this much to go?
I never stopped them before on the odd block, sir.
Well, that's true. That's true. Weirder things. This would not pass the Don smell test on buying options. It might pass the buy. I would think this is kind of sort of somebody crossed these things, delta neutral, sort of buy righty thing. That's what it looks like to me. Let's see, because they trade 125, so I get just, but you know what? In this market, hey, you can pretty much buy any call and it'll work eventually. So what the heck?
Just buy calls and sell puts. That's all you got to do, Mr.
I just buy calls and it works. So I'm looking here, and I think that's what it is. And it looks, at least from right now, that they made a couple of bucks on it.
We shall keep an eye on this one. We'll come back to it not that long from now because it's going to go off pretty quickly. And then we've got next up U.S. Bank Corp, ticker symbol, appropriately enough, USB. That plug everyone loves so much on their computer there. Trading right now about $50 even. I should say up about $1.05 on the day. This is the name that's had, let's see, a year ago was trading 57.16. And then they sold off in the Great Nadir down to, looks like about 28 and change, 28.33. And then they topped out, rallied all the way back up till June 8th, of course, everyone's favorite day, 43.5. And they sold off again down to about 34 and change. And kind of languished there for a while until November. And they started ticking up, looks like pretty aggressively in November. So maybe an earnings cycle there, kicking them up into high gear. Either way, though, from in a span of a week in November, they went from about 30-odd to into the 40s, 44 and change, and then they kind of been slowly and steadily drifting up again until this past week where they gapped up again from about 46 up to about $50 where they are right now. So good couple of months out here for U.S. Bank Corp. Let's see what our Eye of Sauron found out here. And looks like, Mr. Rock Lobster, someone's been paying attention to our odd block. They decided that all the line in the sand puts that we profiled last year worked out pretty well. So maybe they do some here in good old USB, this time to the tune of the Feb 45 puts, going up 7,569 times on the bid for 59 cents over there on the Philly. There are earnings between now and expiration. It's on the 20th of Jan. So this guy's getting a little bit extra juice, a little bit of extra earnings juice here on this bet. But Mr. Rock Lobster, what does your spidey sense tell you about this fairly juicy 5 handles out of the money? I mean, but this thing was trading there about, a couple of weeks ago, so not that long ago. So not that conservative of a strike. It could definitely come into play pretty quickly. He's getting 59 cents for it through earnings. What are your thoughts here on perhaps another of your favorite line in the sand puts, this time in U.S. Bancorp, sir?
It has all the hallmarks of it. 10% is 10% out of the money? It's a little closer than some of the more let's just call them, I don't know if it's daring, but where they hit that like 20-25% out of the money premium. But I think with rates going up, banks do better, and every bank in the world, and not every bank in the world, but if you look at the chart of every bank in the last 5 days, they all look pretty similar. They're going straight up. So this does have all the hallmarks, though, of some sort of line in the sand. This is a person that are a little bummed out. They didn't, stock went from 45 to 50. They didn't participate, so they're going to at least participate if it happens again. So, you got 1% for a little less than, what is that, about 6 weeks hold? So you're doing a little better than 1%, maybe 1.25%, which isn't bad. I mean, the way I look at put selling, I like to get at least 1% minimum per month. I don't like doing less than that. So this could work. But it does have all the line in the sand look about it.
It does indeed. We'll come back to this one to see how it works. And it's not the craziest line in the sand that we've seen here, but we've seen a lot of them over the course of the past year, and most of them worked out. Speaking of working out, with this Angie, we keep punting on this Angie Home Services review. We've always been running along on the show of late. I think we're going to punt on it again. We'll come back to it. Someone getting a little bit of a call palooza there in Angie Home Services. Now it is Thursday. It is time to unleash you folks, listeners. It is time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. This is where we answer all of your various queries across all of the many platforms you guys send them in on, social media, email, smoke signals, carrier pigeon, all that good stuff. Actually, we're turning the tables on you again to kick it off here on the Thursday Mail Block. We asked you guys at the beginning of the week, so it's expiring soon. If you haven't had a chance to play, go over there at Options. Make your voice heard on the old Twitters. We asked you a very simple question. Going to kick off 2021. Very simple question. Will the major indices out there, so your S&Ps, your NASDAQs, your Dows, all that fun stuff, end the year higher or lower? Very basic, very simple question. Give you 3 choices, higher or lower, or I'm already in cash. I'm looking at the numbers right now. They are interesting. Let's go around the horn and see what everyone thinks. Let's start with Bob. Mr. Bob, sir. Do you have a vote on this if you want to weigh in, higher or lower for the year? And then B, more importantly, where do you think our audience is coming down, sir?
Oh, boy. I am not good at predicting the market, so I'm not the one to, ask about this. But, I guess if I was really bad at it, then you should just fade me, right? So
there you go. Fade Bob. Fade the heck out of Bob.
So my call is for a big down year.
You think our audience is voting that way, too?
I doubt it.
You doubt it. All right, there you go. So there you go. Take what he says with a grain of salt. Maybe you want to fade him aggressively. Maybe our audience is doing just that. Mr. Don, same question for you, sir. If you have an outlook, feel free to share it. And then B, more importantly, what do you think our audience is voting for, sir?
Well, I'm going to go higher. Not the kind of year that we had last year, but I'll go for 10 to 12% higher. And my guess is, in all likelihood, the audience will go higher also.
Interesting. Mr. Uncle Mike, same question for you, sir. Where do you fall? You're bullish. I kind of know where you're going to fall. And then B, more importantly, where do you think our audience falls, sir?
Just once, I just like to say, you know what, I'm bearish this year, and I'm just long a ton of puts. I just like to say that one day just to kind of, no, I can't even joke about such a thing. I'm bullish this year, but I'm always a bull, so you're absolutely right on that. It's difficult to say. I could see us either having a major kooky year to where we're up 30% and everyone's saying, oh, there's no way we can go up anymore. But I could also see us having a smaller up year, like 7 to 10%. I don't see us dropping this year. I think there's just going to be a lot of optimism out there because of the COVID supposedly being over. I think that optimism is going to fuel us. The only way I see us going down this year is if we have a ginormous second wave and the vaccines don't work and something like that happens, which in this day and age is always a very distinct possibility. So that's kind of where I stand for the year. In terms of the audience, I think they're bullish as well because I think we have bulls out there.
And last but not least, our diehard cynic, Mr. Rock Lobster, sir. If you have a thought, have at it. And then B, more importantly, what do you think our audience is up to?
So a couple thoughts. One is, just anecdotally, I now know people getting the vaccine. Like my folks got it and other people sprinkling around. I'm hearing a lot of frontline healthcare workers getting it. All you're hearing about how poor the rollout is. So I think that actually is going to have a profound effect. Not now. Certainly after January 20th, I think the narrative might change a little bit in the mainstream media. So I think that will be positive. I think we do have a little bit of an up year because I think all this spending, hopefully restaurants will open, people will start getting back in. Everybody wants to kind of go out and do something, I think, at this point. There could be quite a relief, and I think the market sort of has been front-running that for quite a while at this point.
Yeah, we've had the relief rally, and then the relief rally, and then the extra super-duper relieved rally. That's all in there.
So all of those things, right? What a trade deal we got with China. But
yeah,
anyway,
amazing how that trade war ended to our favor. Amazing.
Yeah, it all worked out very well. So yeah, I think we'll be up a little higher. And actually, just out of our webinar, when the Democrats control Congress, both houses of Congress, and the presidency, the market on average has rallied 13% historically. It's not the best average. It does better on a divided Congress. But 13% is still up as far as I know. So most people wouldn't complain about that. So I'm still going to go modestly up. I think because we do have some pretty rich valuations, we might want to see companies actually start to make some money to justify the valuations. But, I think that's what we're going to get. We're going to have a bit of an up year.
Spoken like a diehard practical Mainer. How dare they merit their sky-high valuation, sir? What kind of insanity are you talking out there? Tesla's at 800. There's no meriting. You just go north. You buy calls and you buckle in and enjoy the ride, Mr. Rocklap. So that's what you do out here. Certainly our friend did that in Bitcoin, and he's laughing all the way to the bank right now. Trade of the decade, trade of the century. We'll have to break it all down a little bit later, see how that one's working out. Spoiler alert, pretty well. Let's see how our audience is faring right now. We still have about a day or so left in this one, so if you're listening to the podcast, you'll have time to vote as well. And it looks like our audience is surprising for them because they're usually a cynical bunch, kind of like the Rock Lobster, fading the hell out of all these rallies. This time, you're going for the gusto. 64.4% are saying the markets will close higher. Now, again, we didn't put a degree in there. We didn't say strongly higher, so you could be maybe in the Rock Lobster camp of a little bit higher. But still, you're all saying positive to the tune of almost two-thirds, 25.3% saying lower, and about 10.3% saying you're already in cash. I guess if you add those two in together, one-third really saying it's going to be lower. But still, surprising. You guys usually fade things a little bit more aggressively. Let's see what else you guys have on the brain up here. Next up comes from Jay Grabsky. He wants to know, Bob and Don, this one's right up your alley here. He wants to know, does anyone calculate some sort of historical volatility product or index for single name stocks. I think this would be particularly informative around earnings season. Thanks and Happy New Year. Happy New Year to you as well. Jay and everyone else takes the time to write in and listen and comment and review our shows. We love all of you out there. Bob and Don, this one's right up your wheelhouse. You just talking at the start of the show about realized volatility rankings, realized volatility and historical volatility. Pretty much the same thing. So what do you have to say here for Jay Grabsky? You guys, I know you have the real day and you're looking at cranking out some more interesting things. Have you explored or dipped your toes in the notion of perhaps something around single names in the future, gentlemen?
Well, yes and no. So regarding our rankings, we only focus on, let's say, the CFTC side or the future side of things. So that would be broad-based indices and gold and crude oil and corn and all of those kinds of things. So we don't get into the individual stocks. We do SPDR, so that's an individual stock, but it kind of acts like the market. We do plan for when we launch our exchange to list futures and perhaps and probably real day options, which are daily delayed strike options. We'll try and list those on other ETFs. So, kind of like mega ETFs, some of the bigger ones we'll plan on launching. But we're not really a securities exchange or going after a securities exchange. We're going to be a CFTC regulated exchange. So we really won't have the ability to list options on individual stocks, and that's kind of why we've even avoided calculating the volatility. Going to Jay's question, we don't calculate the volatility of individual stocks per se.
There you go, Jay. All right, next up we've got Federico Rodenas, representing the international contingent out here. He has a question a lot of you seem to have on your brain, understandably so right now. He wants to know, he says, hi. Well, hello, Federico. He says, I'm holding China Mobile Leap calls, and I haven't been able to find a straight answer on what will happen to Chinese ADRs due to delisting. Will the stock go to OTC? Will it be completely delisted? What will happen to options holders? Thanks in advance, Federico. Yeah, that's an unfortunate scenario there, Federico. These types of delistings typically not good for long premium holders in the options because most of that juice pretty much goes away. Think about it. If the underlying stock is delisted, it's kind of hard to keep trading a leap option. It may be nice if they went upstairs and they took some sort of OTC index and they kept your option alive, but unfortunately that's not what happens over there. But I will give you the standard advice I give to everyone who has questions of this nature about tickers and how they're going to be handled is go over to OCC, the Options Clearing Corp, because they are the ones who decide this. And they will usually, if you type your ticker in there, they will have a circular saying, here's exactly what's going to happen to your options at said time when there is a delisting. That said, it seems like you got a bit of a stay of execution here, Federico, because it looks like NYSE is revisiting delisting, and as of right now, China Mobile is still trading. So it looks like maybe you got some time. So if you're holding those leaps, might be a good time to get the heck out of Dodge, because if they do delist them, that premium not going to look good. Mr. Rock Lobster, you've been around for one or two delistings in your, shall we say, extensive trading history. Why don't you walk Federico really quickly through what happens when these names go bye-bye, sir?
As I recall, they have a closing rotation, and they have to come up with a closing rotation price when they delist something. And I'm trying to remember the last time, because it depends on, because the security still has value. It's not zero, not like it went out of business. So generally they have a closing rotation and get ready for the delisting. They don't just it's gone tomorrow. So there will be some sort of ability for people to get out. I believe things to settle, because that security is not zero. It's just not being listed on this exchange anymore. But, it's like one of those things where, it's on the bubble why hold it, get rid of it, and then come back to it at another time when there's a little bit more clarity on the whole thing. That would be my assumption, what I would do.
You don't want to have your long-term leaps settled out to some price right now that they decide in some rotation, and all that juicy premium that you paid a lot for to go. You don't say how far out you go, but a leap, it's not close. That's going to go the way of the dodo, so you don't want that. If you can still get any juice for those options, sell them, reevaluate, and don't be stuck delisting and then lose all of that juicy premium that you paid so much for there, Federico. We feel for you. These are, again, challenging times for everybody out there. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we do just that. We go around the block and see what folks are keeping an eye on for the rest of this week. Let's start with Bob and Don, since you gents will be on for a little bit. What are you guys keeping an eye on for in the near term here from a realized vol perspective, gentlemen?
So it looks to me that practically since Thanksgiving, we've been in a strong downtrend for realized volatility. We were as high as 21.5 on Thanksgiving Day, and here we are at 9.5. You can practically draw that trend straight down. We did get a little pop, however, from a low of about 8.19 up to the current 9.5. So in keeping with the fact that all of these levels are extremely low for realized volatility, it wouldn't surprise me that we would close the gap a little bit between realized and the VIX 2021 handles by not only seeing VIX possibly drop a little, but by seeing realized meet it and go a little higher.
Interesting stuff. Mr. Uncle Mike, same question for you. And as our permabull in residence, what are you keeping an eye on until our next episode on Monday, sir?
Watching the 10-year note to see if we can stay above the 1% level, and then watching the next key level. We're at all-time highs, so key levels are somewhat out the window, but in the S&P, 3,800 is where it is.
All right, thank you for that. And last but not least, Mr. Rock Lobster, sir, what is on your radar for the rest of this week into maybe vol views tomorrow or indeed into Monday, sir?
I'm just having a conversation with some people in the pit, some of the pit crazies about what's the trajectory now for vol and SPX, and realistically, I think like the big events are done. I think Biden certified and the runoffs are there, and a lot of this election known stuff. But again, we are dealing with Trump, and it is 13 days left. But I think for the most part, you would think that the market would start to get a little tired at this level, right? We've had a lot of rally. Okay, now we need to see a little bit more proof in the pudding to rally higher. So my thought would be that the VIX would start to creep down a little bit to the to underlying vol. So that's kind of, I'm looking for basically that those cash VIX levels to kind of break to sub 21 and stay there for a little bit. Seeing the vol kind of hang out at a place and not having these insane rallies. So that to me is what I'm just looking for. And on the flip side is what industries are going to start to, what industry reigns supreme in 2021? Infrastructure, maybe oil and gas, like if oil prices go up again because we stop maybe we stop drilling, natural gas prices, stuff like that, where we haven't seen a lot of action in the last couple of years, but we could. So, start thinking about the stocks that the market has forgotten because of restaurants being shut down and just all of the stuff. And now maybe some of these infrastructure plays come back a little bit. So that's what I'm looking for.
All right, everybody, that music means we're out of time for this 1 hour options adventure. But before we go, let's go back around the horn. Bob and Don, thanks for joining us on the old program today. If folks are interested, they want to learn more about all things real vol, maybe I know your crowdfunding still ticking along. If they want to participate in that, where should they go? What should they do?
Yeah, great, Mark. Thanks, everybody. We are crowdfunding for our new exchange, and so you just go to demandderivatives.com, and up at the top is the crowdfunding button, and that's your way to invest in the exchange, right? You trade on an exchange, now you could buy one. So it would be nice to have you. The minimum investment's only $105, so throw in a little call option premium there and ride us up, hopefully. The other thing is you can go to demandderivatives.com, same place, and just scroll down a little bit, and there's a button there for the realized volatility rankings. You can get those for free, and when you get onto the rankings page, then it can tell you, how to subscribe to the data or whatever if you want to get more into it. But, the rankings are all free, gives you an idea of what the current realized vol is for each of 40 different assets, and all ranked by the historical, the percentile, and all percentile ranking based on all of the history that we have, which goes back to as far back as you can, so like corn is back to 1950. So we have 70 years worth of data. And whatever corn is, right, it gives you what ranking you are within those past 70 years. So that's basically what we have. So enjoy or come invest with us with crowdfunding and get some free volatility data.
There you go, listeners. $105. That's less than a one lot on Tesla. So go check them out, demandderivatives.com. Kick the tires and light the fires. Check out the crowdfunding if you are indeed intrigued, as well as all the data, historical and otherwise, that Bob and Don broke down for you here on the program. And Mr. Uncle Mike, if folks want someone to hold their hands in these troubled times, where should they go? What should they do?
stcharleswealth.com, my website. For more information, feel free to give me a call, shoot me an email. The information is on my site. I'm more than happy to work with anybody that wants a financial advisor who enjoys the derivative product.
There you go, stcharleswealth.com. And last but not least, Mr. Rock Lobster. If folks want to contact Vol-Man, where should they go? What should they do?
Go to optionpit.com, memberships. You can join our Funky Vol Club. So we've had a good little run lately. Also, Mark's had great runs in his Sharp Bets and Vol Edge products. So if you want to learn about options, watch how it happens. Our Trading Legion for learning the basics and kind of learn to trade and learn the basics at the same time. A lot of education, kind of how to fish for yourself, so to speak. It's all there. It's all there at Option Pit. I'm trying to teach people basically all day long, 5 days a week.
There you go. OptionPit.com is the place to go. And on behalf of the Rock Lobster and Uncle Mike, as well as Bob and Don over there at Demand Derivatives, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in those questions. Keep them coming. We'll be back in about half an hour with Twifo. If you're listening live, we're going to do some rejiggering here in the studio, so we won't be broadcasting in between, but we'll be back live for Twifo in a little bit. Of course, back tomorrow for Volatility Views, and then it kicks off again on Monday with another episode of the Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.